Yeah, being a financial analyst isn't fun. Listening to these calls and doing hundreds of these, reading 10 Qs, it's not fun, and that's why most people want to do shortcuts. And shortcuts don't work. Even this process doesn't always work, right? But shortcuts definitely don't work. Oh, I'll just, invest for 5 minutes a week. That's not going to work. I think that, let's say you look at CPI, right, and you're staring at it. What difference is that going to make to A, your life, B, your portfolio? If it's going to make a big difference to your portfolio, you should probably be hedged out of that, because do you think you have an edge on the CPI? You think you understand it better than anybody else? All right, let's see here. Microsoft segment revenue. They have this productivity and business processes, intelligent cloud, and more personal computing. Kind of the laggard. Oh, okay, so they recast some of these. Thank you, Microsoft, for doing that. It's really nice. It was 13,314. Now it's 13,366. These are just tricks. They just have these funny growth numbers, but they never give the actual number. So Azure's up 35%, but they also have cloud revenue. Thanks for the transparency. So trailing 12 months free cash flow for Microsoft, 60-ish billion. In a world facing increasing headwinds, digital technology is the ultimate tailwind. Man, they don't even put the product highlights on the press release anymore. There are too many. It's kind of ridiculous.
To start, I want to outline the principles that are guiding us through these changing economic times. First, we will invest behind categories that will drive the long-term secular trend where digital technology as a percentage of world's GDP will continue to increase. Second, we will prioritize helping our customers get the most value out of their digital spend so that they can do more with less. And finally, we will be disciplined in managing our cost structure. With that context, this quarter, the Microsoft Cloud again exceeded $25 billion in quarterly revenue, up 24% and 31% in constant currency. And based on current trends continuing, we expect our broader commercial business to grow at around 20% in constant currency this fiscal year as we manage through the cyclical trends affecting our consumer business. Now to data and AI. With our Microsoft Intelligent Data Platform, we provide a complete data fabric, helping customers cut integration tasks associated with bringing together siloed solutions. Customers like Mercedes-Benz are standardizing on our data stack to process and govern massive amounts of data. Cosmos DB is the go-to database powering the world's most demanding workloads at limitless scale. And we're going further with new AI-powered capabilities and Power Automate that turn natural language into advanced workflows. More than 860,000 organizations across every industry, from BP and Fujifilm to ING Bank, iHeartMedia, and Lumen Technologies, now use our security solutions, up 33% year over year. They can save up to 60% when they consolidate our security stack, and the number of customers with more than 4 workloads have increased 50% year over year. More organizations are choosing both our XDR and cloud-native SIEM to secure their entire digital estate.
Our first quarter revenue was $50.1 billion, up 11% and 16% in constant currency. Earnings per share was $2.35 and increased 4% and 11% in constant currency when adjusted for the net tax benefit for the first quarter of fiscal year 22. Driven by strong execution in a dynamic environment, we delivered a solid start to our fiscal year, in line with our expectations, even as we saw many of the macro trends from the end of the fourth quarter continue to weaken through Q1. In our consumer business, PC market demand further deteriorated in September, which impacted our Windows OEM and Surface businesses, and reductions in customer advertising spend, which also weakened later in the quarter, impacted search and news advertising and LinkedIn marketing solutions. We saw strong overall demand for our Microsoft Cloud offerings, with growth of 31% in constant currency, as well as share gains across many businesses. Commercial bookings declined 3% and increased 16% in constant currency on a flat expiry base. Excluding the FX impact, growth was driven by strong renewal execution, and we continued to see growth in the number of large long-term Azure and Microsoft 365 contracts across all deal sizes. More than half of the $10 million plus Microsoft 365 bookings came from E5. Quarterly spend variability in the timing of our cloud infrastructure build-out. Next, to segment guidance. In productivity and business processes, we expect revenue to grow between 11 and 13% in constant currency, or 16.6 to 16.9 billion US dollars. In Office Commercial, revenue growth will again be driven by Office 365, with seat growth across customer segments and ARPU growth through E5. We expect Office 365 revenue growth to be similar to last quarter on a constant currency basis. In our on-premises business, we expect revenue to decline in the low to mid 30s. In Office Consumer, we expect revenue to decline low to mid single digits, as Microsoft 365 subscription growth will be more than offset by unfavorable FX impact. And in Enterprise Services, we expect revenue growth to be in the low single digits, driven by enterprise support. In More Personal Computing, we expect revenue of 14.5 to 14.9 billion US dollars. And in Gaming, we expect revenue to decline in the low to mid-teens against a strong prior year comparable. That included several first-party title launches, partially offset by growth in Xbox Game Pass subscribers. We expect Xbox content and services revenue to decline in the low to mid-teens.
Excellent. Thank you guys for taking the question, and impressive results in what's obviously a very difficult environment. A question for Amy, and it pains me to ask a question about a percentage point, but I think this is what's on a lot of investors' minds. This is 2 quarters in a row now where Azure constant currency growth came in a little bit below your guidance. I think what investors are worrying about, or sort of wondering about, is there an inherent volatility in that business that's just harder to forecast? And on a go-forward basis, how should we think about that forecast? Have you applied more conservatism in it? And how should we think about Azure growth, like the glide path for the whole year? If you could address those, I think it would put a lot of investor minds at ease.
Thanks, Keith. And I do appreciate you asking about that one point, because I do know it is a point of focus every quarter. And what I would say is there is some inherent volatility to that number. A point here or there, and you've heard me say it when we've been a point better, and you've heard me say it when we've been a point worse. And I want to focus mostly on what and how we see the number, which is that it is still a very large growth rate, with growth across all segments and with growth across all geos. That was, to the question, generally in line with where we expected. And what we did see through the quarter is a real focus, both by customers, but also by our sales and customer success teams, on going proactively to customers and making sure we are helping them optimize their workloads. And as we went through the quarter, and as, of course, the macroeconomic environment got more complicated, we continued to focus on that, because ultimately those optimizations bring value, even as budgets are still growing and budgeted spend is still growing. And so it's this nuance of you're still seeing digitization. This is still the tailwind that helps customers solve problems. This is still the way to build growth and leverage in your business. And yet, you still want to optimize your workloads. You still want to run them the most efficiently so that you can then make room for new workload growth. It is that one point I know that people are focused on, but if you step back and say that this is how you drive ultimate share gains and build customer loyalty and help customers grow, I think that needs to be the focus of our teams inside the company and also the partners that we rely on to help customers do that as well.
People are really scared of this Azure slowdown, I guess. Well, I'll minimize that job and see what happens, but...
We talked about it, new deal moderation. I referred to that, frankly, in Q4 as well.
The new season of League of
Legends. It tended to be,
started.
to your point, the smaller end of the market, small to mid-sized companies. And it also tended to be through partner, which we had talked about before, Brent, a little bit, and I'd referred to. And it tended to be around selling what is, in fact, some new value that we put into E3. So this is a place where there is some macro impact, but there's also, I think, a better job we can do in our E3 SKU, which is really a core value proposition. We added a lot of value to that SKU in Q4 in terms of security and auto patching for Windows. It's a great value in the same way E5 is. We landed E5 really well. We've got some work to do on landing E3. So there is some macro, seems pretty consistent, frankly, more than inconsistent with what we saw And there is some execution that I think, frankly, we can get better at as well.
Thank you.
Thanks, Brent. Jesse, next question, please.
Our next question is coming from Mark Murphy with JP Morgan. Please proceed with your question.
Yes, thank you very much. Satya, this quarter, we're seeing an inflection in many of your AI breakthroughs, thinking of GitHub Copilot and the image generation in your designer product. What is it that's enabling you to innovate so rapidly and essentially to be first to market? I'm wondering if it's the OpenAI relationship or maybe some of your inferencing capabilities or something else. And then as a quick follow-up, Amy, you did mention the lower margins in Azure due to the higher energy costs. Are you inferring that we can kind of dimensionalize that incremental impact at something like $200 million per quarter? And then is there anything you can do to try to manage that through this period?
Yeah, thanks for the question. First, yes, the OpenAI partnership is a very critical partnership for us. Perhaps it's sort of important to call out that we built the supercomputing capability inside of Azure, which is highly differentiated. The way compute and the network in particular come together in order to support these large-scale training of these platform models or foundation models is being very critical. That's what's driven, in fact, the progress OpenAI has been making. And of course, we then productize it, as part of Azure OpenAI services. And that's what we're seeing both being used by our own first-party applications, whether it's the GitHub Copilot or Designer, even inside Edge, and then, of course, the third party like Mattel. And so we're very excited about it. We have a lot more to talk about when it comes to GitHub Universe. I think you'll see more advances on the GitHub Copilot, which is off to a fantastic start. But overall, this is an area of huge investment. The AI moment clearly has arrived. And it's going to be part of every product, whether it's, in fact, you mentioned our Power Platform, because that's another area where we're innovating in terms of incorporating all of these AI models. So I think AI is a place where I think we have differentiated capability at the infrastructure layer for training and inference, and the models themselves are platforms for third parties, and our first-party applications are getting better because of the use of those AI models.
And to your question on energy costs, let me try to provide a little bit of help there. We did not see as big of that. As I said, it's over 800 for the year. Some of that was in Q1, but the majority of it will be in Q2 through 4. And I think if you want to think about it as somewhere, 250-ish a quarter. It's not exact, but that would be a decent assumption for the remainder of the year.